Raymond. Now, Uganda's I&M Bank's net profit for the 12 months to December 2023 grew by 105% to 11.5 billion shillings, an increase of 5.9 billion shillings. This is the second consecutive year the bank has posted profits since I&M Group acquired Orient Bank in 2021. However, questions are being asked as to how the bank has managed this feat in an increasingly hostile economy. And to help us understand what happened, we do have the bank's Chief Executive Officer, BAIRSTOW. Good evening, Robin, and thank you for joining us on NTV.
Good evening, Mildred. It's good to be here. Thank you.
Thank you. Now, since 2021, many businesses have been impacted by the COVID-19. Many of them closed down, others are still recovering. How is I&M Bank able to make such profits in these really difficult times?
You know, we've made good profits in the last year, but remember that before that we took very large impairments within the bank because of the tough times that people were experiencing, which impacted heavily on our profitability. But that said, the bank basically went back to basics. First of all, we looked at the culture of the organization. Obviously, the bank was acquired in April of 2021, rebranded in November 2021. And you have to go from being an independent organization that's 30 years old and has been run independent to be part of a group. And the best way to do that is to align cultures, make sure that our behaviors and our values are aligned. And then we set a 3-year strategic target to look after certain areas. One was the growth of our customer coverage, the focusing on acquiring new customers. Number 2 was making sure that we could take care of those credit impairments, make us a more resilient bank, make sure we looked after our compliance and our risk of the bank. And then finally, we spent a lot of time looking at technology. And we've trying to make it easier for clients to bank with us, and at the same time, I mean, that in itself has been a major investment, and it culminated this year in our changing core banking system, our switch provision, all of our digital channels, and in fact our data centers. We moved 2 data centers, and to a large extent, the market didn't feel those changes. But it set a foundation for us. So a lot of it is a lot of basic business strategy that we've used.
All right. So as an institution, we also note that you grew your loans book by about 28.55% to over 300 billion shillings. Now, what does this say about Uganda's appetite for borrowing?
Although costs are high at the moment, and we have to understand that it's a global phenomenon, which has also had an impact. COVID had an impact on supply chains, which has obviously impacted costs. Borrowing costs globally have increased, but people still need to finance the working capital cycle, and there is still sufficient margin in their businesses that they can carry the costs that they're having to pay, and we are seeing demand. It also has to do with innovative products and the way that we approach our customers, analyze their business and provide them funding, both a mixture of local and foreign currency. And we've seen demand is quite high, and fortunately, market is only in the last quarter. I think market has grown around about 5% in terms of overall assets within the sector. So we're leading that. So it has a lot to do with the relationships, the way we structure, the type of loans we offer, etc. That is what is also allowing us to grow ahead of the market.
Okay. Speaking of relationships, talk to us about the increasing opportunities that you have for supporting emerging sectors such as the medium-scale enterprises.
SMMEs are a major focus. They account for almost 80% of GDP growth in a lot of countries, or from a banking sector. what you need to do is when you're dealing with small businesses, it's not a little big business. They have needs and they have requirements that are completely different to large businesses. They don't have access to good financial information. Their financial record keeping is not adequate. So we find other ways to look at our acceptance criteria of the customer as a whole, and number two, risk. The risk acceptance is also really important, and then you have to make allowances for the areas that they don't have access to. So we help customers by analysing their cash flow through their bank statements. We look at the inventory. We look at other areas as opposed to the family silverware and cash cover or money that they can borrow from people. We'll look at other assets. We can use we can use stock. We can use the debtors. There's more avenues available to us, and then we're about to launch a new product specifically aimed at female entrepreneurs.
Okay. And what is the product?
The product is loans of up to 100 million. And the most important thing that will look there is bank statements. Either your bank statements at your existing company, we can look at throughput through a mobile money account, or through our own account. Okay. And if you bank with us for 6 months, we can see your cash flow through your account, and that gives us sufficient to be able to make a call in terms of whether we can lend you money or not.
And you say this is for women only?
Specifically aimed at women across the network, and we see that a lot of women businesswomen, in fact, their repayment ability, their commitment to repaying loans, etc., is a lower risk for us. When we see that if we can do that, we can change the lives of many people in the communities in which they live.
Okay, so Robin, as we conclude this conversation now, some have thought that there's competition from non-traditional financial services such as the SACCOs that pose a threat to the banking sector. What would be your take on this?
Yes, there has been. It does create competition, but at the same time, I think it's more complementary to the banking sector. We don't, in some instances, have the reach that agents have, that the small money lenders do, that some of the microfinance institutions do. We have a different approach to lending. In many instances, we provide the debt support to microfinance institutions for them to on-lend, so we provide them with that additional support. Okay. It has meant that there is access to banking finance, etc., has been expanded, and our penetration is a lot deeper. So we find that it's more complementary and it's more collaborative than competitive. Okay. On the whole.
All right. So what would be your closing remarks of our conversation?
I think the main, from a banking point of view and people approaching banks,
yes.
My 5 minutes to be able to, not 5 minutes, 5 seconds to tell them what to do. There are opportunities out there for borrowing. There are many companies that will provide support for you if you don't have collateral. There's information out there. Go and have a look at it. The DFIs, FMO, European Investment Bank, USAID has done a lot of fantastic work in the country. There are opportunities for you. Don't think that you don't have an avenue. Go into the bank and talk to somebody. Okay. One of the things that we found during COVID is people don't want to talk to a chatbot or an AI person or an AI robot answering them. They want to talk to people. So if go to your local bank branch, have a talk to the relationship managers.
Right.
Tell them what your views and requirements are, and let them help you.
All right. Thank you, Robin, for making time to speak to us. And that is Robin BAIRSTOW, the Chief Executive Officer of I&M Bank, getting to share with us how the bank is able to flourish in the very hard economic times. And that being said, we take a look at the financial